Is Lululemon, ticker symbol LULU, a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Lulu using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Lululemon is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Lulu stock to your portfolio. Right now, Lululemon stock trades for $311.92 per share. In its last day of trading, it's up 2.98% alone. However, when we look back over the last year, their stock price is actually down 12.2%. This dramatically underperforms the S&P 500, which is up more than 20%. Lululemon is trading just $18 above their 52-week lows after being cut by more than $200 from their 52-week highs of $516 per share. In the last decade, however, it's a totally different story. Lululemon has been one of the top performing stocks. Even with this recent haircut, they've compounded at 23.4% annually. And when we go back to when they were listed during the global financial crisis, in the last 16 and a half years, they've compounded at 18% annually. Their stock price has gone up more than 14 times in these years alone. And how big is Lululemon? Today, they have a market cap of $38 billion. Ray Dalio has invested in the company and today owns a small $15.2 million position. He first bought the business in the third quarter of 2014. Since then, he's bought 9 more times and he's sold shares on 12 different occasions. In his most recent purchase, he's down around 17%. Getting started with metric number 1, we want their average returns on capital to be greater than 14%. Over the long run, these returns are going to drive a company's success. The average business earns around 7% returns, so we can build in margin of safety by looking at higher quality companies. In their last 5 years, Lululemon has grown their returns on capital, which have been good throughout. They increased these from 32.5% in their fiscal 2020 to just under 39% today. These only briefly dropped during the pandemic, and still they were at 24% returns. Overall, when they're averaged out, Lululemon earns 34.6% returns on capital. That's 5 times better than a normal business, and this is a huge check on metric number 1. Lululemon Athletica designs, distributes, and markets athletic apparel, footwear, and accessories for women, men, and girls. Lululemon offers pants, shorts, tops, and jackets for both leisure and athleisure activities, such as yoga and running. Lululemon sells its products through more than 700 company-owned stores, e-commerce, outlets, and wholesale accounts. The company was founded in 1998 and it's based in Vancouver, Canada. Building on our understanding of the company, we want to see growth in their sales, earnings, and free cash flows. This is all or nothing. In the last 5 years, Lululemon has grown their sales or their revenues by 2.5 times. Their earnings are up at the same rate, and their free cash flows have increased by 4 times. Those are huge gains and huge growth, especially post-pandemic for the business, and it's a solid check on metric number 2. It's great that they've kept these up very steadily in nearly every year. Metric number 3 looks at the company from the view of an individual shareholder. Here we want to see earnings per share growth over this time. This is especially important when we combine them with their high returns on capital. This builds on our last metric where we learned their earnings have grown by nearly 2.5 times. The company has also bought back a slight amount of shares, repurchasing around 3% over this time, which means their earnings per share have more than doubled as well. It's another check on metric number 3, and Lululemon is perfect to start things off. Our 4th metric is similar but even more important. Here we want their free cash flows per share to have grown as well. In this time, their free cash flows have more than quadrupled and they've grown even faster than their earnings. This comes from a lower base in 2020, and they had a lower amount of free cash flows per share in 2023 as well, but overall they're increasing at a very fast rate, and Lululemon gets great free cash flow conversion from their earnings to cash flows here. It's yet another check, and Lululemon is still perfect. To build on this momentum, let's look at the company's balance sheet. Wonderful companies can grow, earn high returns, and they don't have to use a lot of debt. Lululemon is no different. They've had negative net debt in all 5 of these years, which means that they have a cash cushion on their balance sheet. On top of this, the company also posts positive free cash flows in this time as well. Today, they're sitting on an $840 million cash cushion, and they brought in $3.9 billion of free cash flows in their last 5 years. It's a huge check here on metric number 5, where we wanted the sum of their free cash flows to be greater than their net debt. The numbers look very healthy, and Lululemon is 5 for 5 so far. Now, why don't we cover our bonus before we try to figure out what they're worth? Ben Graham, the father of value investing and Warren Buffett's teacher, wanted a current ratio greater than 1.5 times. He viewed this as being a key stock safety metric. It's a measure of short-term liquidity for how a company can pay its current liabilities using its current assets. With this, Lululemon has been above a 1.5 times current ratio in all 5 of the last years. They've steadily increased this ratio for the last 3 years, and it's at 2.49% today. That's a solid check on our bonus, and Lululemon looks like it's in good shape here as well. Now, the big metric of them all, metric number 6, which is also our first valuation of the day, we want Lululemon's average free cash flows divided by their enterprise value to give us a yield above 5%. This would give us a rate that's in line with the history of the S&P 500. Today, when we add their market cap and their net debt, Lululemon has a $37.3 billion enterprise value. Enterprise value helps us look at Lulu more like it's a private business. It adds their net debt and their market cap together. In an average year over this time, Lululemon brought in $785 million in cash. When we divide that by their enterprise value, today it gives us around a 2% average yield. That may be slightly unfair to the business because of its growth over this time. Today, in their last 12 months, they brought in $1.64 billion in cash. When that's divided by their enterprise value, it still gives us around a 4.5% current free cash flow yield. That's just slightly below that benchmark as well, so on both of these, they're under. This means today on metric number 6, it's our first and only X for Lululemon. But don't throw this business out. You're going to want to see what our next 2 valuations have to say before we put them together at the end of the video. Our second valuation uses a discounted cash flow model. Here we're taking an average of their free cash flows, and then we're going to use historical numbers to grow them into the future. Let's assume the company will grow its cash flows at 19.3% in each of the next 10 years. Then in the following decade, we'll assume that this growth rate is cut in half. We're also going to add in the company's tangible book value to give an estimate of their net worth. With these together, if we want a market-beating 15% rate of return, which we'll use as our discount rate, and it's what Warren Buffett wants from his investments, then today a DCF value looks to be around $214 per share. That's nearly $100 below their current stock price. Keep some key points in mind. The first is Lululemon has been a predictable business in their past. The second is they're trading toward the low end of some of their historical valuations. Still, these are toward the higher end of their industry, where they're still trading around 4 times sales, just as a crude metric. Based on these past valuations and analyst estimates for the future, with a lot of expected growth, a GF value will come in at $500 per share. That's up $178 from their current stock price. Now, Buffett loves the numbers, but he really cares about the qualities of a business. Let's learn what these are through a long and a short thesis before we put them together with their valuations to figure out what Lululemon is really worth in today's market. Let's start with a long thesis first. Number 1, Lululemon's digital sales increased to around $5 billion in 2023. Those came all the way from less than $100 million in 2010, but its stores have remained very productive. Its sales per square foot of around $1,600 are extremely high for its industry. Number 2, Lululemon still has a big opportunity in mainland China, which accounted for just 10% of its 2023 sales. Plus, China is already the second largest sportswear market in the world. Number 3, Lululemon is often credited with the development of athleisure, which is a major change in how people dress and has increasingly broad appeal. But it's not all positives. Let's look at a short thesis as well. Number 1, leggings and other key Lululemon products are offered by everyone from low-priced fast fashion to luxury apparel brands. The competitiveness of the sportswear industry continues to rise. Number 2, as Lululemon expands beyond yoga into categories like running and training and offers footwear, it competes directly with established athletic apparel firms like Nike. And number 3, Lululemon is aggressively expanding in countries in which awareness of its brands is still relatively low. It may not have as much success in these regions as it did in North America. Now let's put everything together for Lululemon to get to their value and rating. Today we learned they go 5 for 6 on our Select 6 analysis. They also look good on our bonus safety metric. Even with past growth that's been very quick, they need to sustain this into the future for their valuations to be warranted. They only looked off based on their cash flows, and our valuations were somewhat split. While they did create the athleisure category, as noted, they're seeing increasing competition. The number 1 question viewers ask is how to find undervalued stocks even faster. That's why I use this tool that shows Lululemon's valuation today. Right now, it looks like the company's worth $287 per share. That's nearly at their 52-week low, but it's below today's stock price. It's well below their street target price. To find undervalued stocks, sign up for our investing tools to get exclusive bonus coverage of 85 stocks and counting.